Welcome to Virtual Coffee with Dawn Rickabaugh, the Note Queen, where we talk about owner financing and notes. Financial solutions, one mom and pop to another.
This is the first virtual coffee that I have held in 2018, so welcome to Virtual Coffee, February 2018. This is where we talk about anything having to do with owner financing and notes. My name is Dawn Rickabaugh. I'll be facilitating this conversation today. And I'm really pleased that you can be here. This is, like I always say, one of my favorite things that I do because I believe so deeply that if we can all function in this space a lot more gracefully, we can do a lot to liberate ourselves and each other. So first of all, Axel, will you please do the little housekeeping things that tell people, about the muting or any other things that we need to know before we get started?
Sure. For anyone connected via computer, in the bottom left-hand corner, you'll see a little microphone, and you can unmute yourself right there just by clicking unmute. By default, we do mute the callers, but if you want to jump in or if Dawn opens up the calls for questions, just click that unmute button and you can speak. If you're calling in from a phone, you'll simply press *6. And if it doesn't work, just try it again. Don't get frustrated. Just press *6 and it should unmute you. And yeah, that's pretty much it.
Okay, and if there's the chat feature, or if you email Axel or something like that, and we have extra time, then maybe we can get to your questions. But the way that we've organized this is people who want to submit hot seat interest forms can have a chance to get guaranteed airtime regarding their specific questions or what they have to share. And just a thank you to all of you who sent me really nice notes after the passing of my mother last month. It's been a lot to be dealing with. In fact, I'm at her house and my siblings and I are doing the thing, settling the estate and going through her house. So I appreciate all the love that's come back to me, and I apologize that I haven't yet been able to thank each and every one of you, but I really appreciate that. This community is very nourishing, and I appreciate all of you very much. So let's just open it up to anyone else who's here who just has a question or something that they want to share. I mean, let's just open the lines up. Who wants to just talk, say something, share?
Hi, Dawn.
Ed, how are you doing?
I'm doing well. Good morning. Thank you for your consultation a couple of months ago.
You're very welcome.
I have made some adjustments in my lending practice to reduce risk. I've cut down on the number of rehab loans, and I'm doing more small loans to landlords who need money.
Fantastic.
I think that's more stable. I have a background as a landlord and not as a rehabber, so that's a way of reducing risk for me. My question for you is, now that interest rates are starting to rise and the trend since 1981 of declining interest rates and then kind of a zero interest rate policy since 2008, we're now experiencing rising interest rates for the first time in the working life or entire life of most of us. And I'm wondering if you've thought that through and if you have any insights on how that's going to affect notes and real estate.
Yeah, well, great question. And thank you for sharing that. I mean, a lot of people, and I may ask you to expand on that for a second, if you don't mind, because a lot of people go, how do I get started investing in notes? And private money lending to rehabbers is one of the lowest hanging fruits for people to get into the business of, okay, you're not buying a discounted note, but you have a note, right? You're lending money, originating, and usually through a hard money broker in your neighborhood. So it can be a really easy way and quick way to get invested in that space. From what I remember, have had worked really well, except for 2 or 3 properties I ended up taking back, and they were partially rehabbed, and you just didn't care for the headache of it. So it's really cool to hear that you can go, well, I'm not going to, close the shop. I'm just going to modify what I'm already doing. So that sounds beautiful. It's excellent. So the conversation, and anyone else who feels like they have something to add to this, please unmute yourself so that you can speak to Edward's question. But that is where anytime interest rates are rising, it's going to push everything up, right? So, so then because the thing is with notes, whether you're lending money or you're buying a discounted note, the reason that you can make 7, 8, 9, 10, 12, 15% and more, depending on the situation, is because you have some risk and it is some work. So you have to go, it has to be enough better than what you could get in a bank account, a mutual fund, a CD, to be worth the extra risk and work that the notes require. So if you can park your money all day long with no risk and no work and get a 5% return, then you're not going to accept 7 or 8% and do a lot more risk and a lot more perceived risk. I won't say leaving your money in the bank is not risky. To me, it is. I don't like leaving large amounts of money in any one bank account. It makes me feel icky. But I'm just saying the perceived risk and the amount of work that it is. So anyone, like, you know how much work you had to do to take back a couple properties, right? I mean, that became kind of a part-time job, didn't it?
Yes, it did.
Right? So that means what people, if you can make a nice perceived safe investment at 5%, then now if you would have been happy with 6%, maybe you need 9%. Or if you can make safe money all day long at 7, well, now you're going to need 10 or 12 or more to make it worth it. So yes, most people will be wanting higher returns if interest rates go up, unless, for me, like, yeah, they're going up, but I still have in my world, I have a perceived risk that the traditional models of stock markets and banks and fiat currency, I have more perceived risk there than even in the business that I do with being secured by real assets, like real estate notes secured by real estate. My paper can turn back into property, which will have some intrinsic value generally, no matter what, gold, silver, even crypto, something that has some sort of intrinsic value beyond paper and the manipulated markets that we see on Wall Street, in my opinion. So, but so for me, it doesn't seduce me at all. If they say, oh, there's a 7% mutual fund, I'm not even looking. I don't care. None, Social Security doesn't exist for me. None of those things exist for me. I don't count on any of them handling my money. So, but in general, most people will perceive that. So in response to that, and I'll open it up here and quit rambling for a second, but if you believe that interest rates are going to be going up, then you're going to stay in relatively short-term vehicles. So if you go, hey, I don't want to be stuck at a 7% return or 8% return for the next 30 years, if I think interest rates are going to be up at 10 and 12, right? So if you believe and are worried about missing out on that interest rate spread, then you don't go very long into your investments. That's all I kind of have to offer. Is there anyone else that can speak to this topic? I think it's a really good thing to think about.
Well, when interest rates rise, it crushes the bond market almost by definition, and that puts pressure on the stock market because most people who are involved in bonds and stocks are similar institutions or individuals, and it puts pressure on mortgage rates, which makes housing less affordable in the traditional markets. So I'm just alert to this. In fact, I've given a talk to my local real estate association. They asked me to do it again on the other side of town to the people that go to the different areas. But I'm just calling people's attention to the fact that we're in a new arena, and none of us is really aware by our experience of what this is going to do. We're more like explorers than tourists anymore in the real estate community.
Right. Yeah, no, I think it's a good point. And we really are in a financial landscape that we've never been at before. And I don't know how things will shake out. But I just know historically the conversation in the note business has been, if if someone could get a bank loan at 5, well, then you're going to own or carry to them. This is just general. You're going to own or carry to them for 7 or 8. But if they if they have to pay 8% for a bank loan, then you're going to own or carry at generally 2 to 3 points above what, if someone could qualify for a bank loan, that they would normally get. And then, like I said, a lot of, the thinking in the industry that I've evolved through in the last couple decades is just short-term versus long-term sort of vehicles. So I don't know. I hedge my bets with a lot of things. Property paper. My paper is, I have some short-term loans. I have some that go out long. Like I said, I have some gold. I have some silver. I have some crypto. I'm a prepper. I got food and water and, the things, medical supplies. So I really, to me, nobody knows what's going to happen. If you have any parting comments of what you think people should be doing, let's hear them now.
Well, my parting comments would be to keep an eye on risk and become a little bit more risk averse, and to become very flexible, as you've just described all the different things you're doing, to be flexible and not just to focus on one arena. For example, a landlord might also become a real estate agent or something like that. Or to be, if someone is involved in their day-to-day job and want to get involved in real estate, be sure they're well established in the real estate before they give up their job.
Yeah, I think that's very wise. To me, it's a time to be hunkering down a bit. Not that I don't actively invest in the market, but I'm very conservative now in the things that I'll do, especially if I don't directly control the asset, like with notes, or maybe not so much with loans, but in discounted notes, frequently we're not local to the asset. So in that case, like I really am sticking more to, I really hate to be more than 50 cents against an asset. I really don't like it, because I've seen the movie play out in my own portfolio over the last 10 years. And so I go, oh, that worked out. That didn't work out. That's why the fundamentals in the note industry were the way they were, right? So some of that I've reinvented the wheel on, because what I see a lot of, and I'm glad you brought this up, and then we'll move on here, Ed. But a lot of people go, hey, can you tell me this one guy, hey, there's small investments with a high yield. So let's say you can make 14% on these little notes secured by little houses. I mean, like Larry Goins, like he's a genius, right? Like these HUD homes, they're buying them for $5,000 to $10,000, and they're selling them for 30 to 40 with owner carry. So then they've got this note that's let's say you got a $35,000 note, so they're in it for 10. Acquisition and maybe rehab or not, $10,000. They sell it for 40. They take 5 down. Now they've got a $35,000 note, and now they want to say, oh, well, I'll give you, you're going to make a 15% return on that. So they discount. Let's say you're buying the note for 20, and you're like, oh, ka-ching, man, where can you get 14%, 15% on 20 grand, and someone just handed it to you, and it's secured by this house worth 40. No, it's not really worth 40. What have you done there? It's a great return, but what's the risk? What's the actual cash value of that property?
Are you asking me?
Yeah, we're just creating dialogue.
The way Larry Goins sells his properties, whenever you do a seller finance, you can charge the buyer a higher rate than the market rate.
Right.
So you take a loss there to begin with, a potential loss in terms of market value.
Well, what I'm saying is it's a great model for him and for some of his note buyers. It's just, and I'm not knocking him at all. I mean, the guy's a genius. He really is. And I bought other similar types of paper, not actually from him, but a student of his. I have bought 12 property notes from him. But what I'm saying is the acquisition and the quick cash value of that house is pretty much not too much more than these guys have into it. Say 10 grand, right?
Right.
If you have to sell it quick, it's worth 10. So even though you got a screaming deal, you paid 20,000 for a note, and that's great if the note performs. What happens if it doesn't perform? What's the actual cash value of that property if you had to sell it quick from another state? It's 10.
Yeah.
So
right.
what I'm saying is, in some of these markets, it doesn't mean it's not a good deal. It means you just have to go in with your eyes wide open with balancing risk and reward. That's all I'm saying there, because I think what they're doing is great. They're providing home ownership for a ton of people who otherwise never have it. That's what I love about owner financing. And then they can sell the note to put huge profits in their pockets and to create great investment opportunities for people who are ready for it. You just can't go in blindly thinking that when you buy a note, it's as stable as an insurance annuity or something else like that. These are real people and real deals, and real life happens. So you have to just know that if you buy 10 notes or a dozen notes of this kind of thing where there was maybe only 5,000 down out of someone's pocket, but the actual cash value, if you had to sell it quick to a wholesaler or an investor, you have to just realize that it's less than what you paid for the note generally. Thank you for the coffee. Did you give me the wrong coffee? Oh. Thank you. So this is virtual coffee, if I forgot to say, and I now finally have my coffee. Okay, I see something, a raised hand from a 650. Is that something different?
It's Ken. That's Ken.
Ken Bucho? Let's bring him in.
You there, Ken?
Yeah, I'm here. I'm at the gym. That's why I muted myself. There might be too much noise going on.
Awesome. Pump one for me. I'm out of my exercise routine right now.
And also, too, Don, I'm sorry for the loss of your mom and stuff, too. I just wanted to...
I don't hear you, Ken.
Can you hear me now?
I can hear you right now, yeah.
Yeah, I just wanted to say I'm sorry for your mom's loss.
Thank you. Thank you very much. Yeah, she was a doll. She was practically a saint. I have a lot to live up to.
Yeah.
But all right. So Ed, thank you for bringing up that conversation. I think we will. We're at 9:20, and this time always goes so fast. Ken, do you have anything else you wanted to add to the conversation we've just been having, or?
No, I just came in a little late and stuff, so I didn't hear too much of it and stuff, so I'm just listening at this point.
Okay, I really appreciate hearing from you, Ken. I really value your. All right, take care. All right, now, so basically, Axel, who's our guy from LA?
Okay, so we've had a couple people. I might have a question related to Ed.
Okay.
This is from Jason. He says, "What was the real estate guy's name that does these loans?"
Larry Goins, Goins. Larry Goins. He's like a guru guy in the space, and he's really smart, and he's made a fortune for himself and a lot of his students. I can't remember what he calls his program. Does anyone? I know Ed probably does. I just can't remember, but go hook up with Larry Goins, because he's buying. Now, to be Larry Goins is to really be where the cash flows out. If you're the deal maker, if you're the rainmaker, you're going to make a lot more money than if you're sitting back and taking the secondary product. Doesn't mean you can't do well, but think about Larry buying a house for 10, selling it for 40, taking a 5,000 down payment, then selling the note for 20. So now he made $15,000 on a crappy little piece of property in the Midwest somewhere. I don't know. He's making, you can't even use, you don't need a calculator to know what kind of returns that guy is making. But he's selling his notes. So, I think you can take a little bit of money and 15, 20,000, and you can make double-digit returns easily. I can't guarantee what he's doing. You just and it's great, right? But don't take your last $15,000 and go, great, I'm just going to sit back and do nothing and I'm going to get this great return. You're not factoring in the potential risk of the payments stop coming in, then you have to foreclose, then you have to get the property back, and then the best you can do is get 8 or 10 grand out of it for a quick cash sale. So does that make sense to everyone who's listening? It's I set up my self-directed form. Okay. Anyway, so that's the only point I'm making. But Larry Goins is a good operator and a good educator, and he's making bank. So that's just one name out of several. I'm sorry, that's all I'm thinking of right at the minute. So Goins, Larry Goins. Check him out. And there's other people who are selling off small, high interest rate and note investment opportunities. You just have to know that you're getting into some risks. It's got to be balanced. All right. Never leave yourself without savings in your bank and under your mattress. You know, you've got to be able to deal with short-term emergencies in your life because investments generally are not liquid. Once you're in a piece of real estate, once you're in a note, you can't get cash money right out of them like in 24 hours, right? It takes some time. Okay, let's.
Hello, Don.
Yeah. Wilbur.
Oh, yes, how you been?
Chicago, right?
Yes, ma'am.
Okay, how you doing, Wilbur?
Still trying to keep up with you. Anyway, Larry Goins.
Larry Goins.
Yes, he has a book out, his program called HUD Homes Half Off.
HUD Home. Say that again? Say it again?
Let me see. HUD Homes Half Off.
Yeah, that sounds right. But he's prolific. He's probably got a lot of courses and materials out there, but I've met the guy personally.
Yes, Getting Started in Real Estate Day Trading, another book he has. And so, I've been, one thing I like about him is he advocates working with realtors. A lot of investors, give realtors a bad name.
As far as I know, he's a clean operator. There's been other people that I have become aware of, but they may have some complaints against them or something. So,
yeah, well,
which can be legitimate or not. It's just hard to navigate the landscape. But you just got to do your due diligence, not only on the investments that you make, but the people that you do business with. So
yeah, because being a licensed realtor, anybody advocates working with realtors, and I'm pretty much for them, and he does do that. So that's why I really just got his program. So I'm like in a study phase right now.
Yeah, I mean, I'll tell you what, just realtors, when they're good at what they do, and especially if they've educated themselves in some of these non-traditional ways of closing properties, and I've promised to get back to some other people here, but I'm going to tell this quick story just as an example. I'm here in Southern California dealing with my mom's house. We're going to sell it. She owns it free and clear. Maybe it's worth $800,000 or $900,000. It looks to be in that range. And I used to be a broker, and I obviously have been an investor. I know real estate. I could sell it myself without a realtor. That is not a good use of my time. And just because I'm really good at one thing doesn't mean I'm good at all things. I have my good friend, Chris Matheson, down here. She's the one that sold my house down here when I moved out of LA. I call her right away because realtors who are good at what they do are worth their weight in gold. And I use them all the time. There's some smaller assets that it's just doesn't make sense. But I mean, I love working with realtors, and I like building a team of knowledgeable, effective people. And so because she's worked with me over the years, I consulted on a deal. She was on a realtor, helped her close a deal several years ago. From there, she became one of my investors, and still she's one of my investors that I've been investing with for years now. And she knows this. I brought her a lot of creative deals that she's looked at. And so at the point she says, look, Don, one of the neighbors that said they're interested, would you be willing to do owner carry? And I said, well, for short term, because really I want velocity turning around this house. So I told her when she took the listing from me, I said, look, I want velocity. But before there's a crack in the market and people get wonky, and this house loses potential value, I want someone locked in as soon as possible. So I would be willing to take a 30 to 50% down payment, and we close in 7 to 10 days. And then I give them 60 to 90 days to refinance me out. So I'm not they don't have to get a purchase loan. They're doing a refi, right? So I would rather do that and hang out in the market and find out in 45 to 60 days that someone can't qualify, and then I'm back on the market again. So one of the neighbors here came to Chris, and she said he really wants the property, but he can only come up with $100,000. Well, that's basically 10%, right? And I said, but she goes, I don't think you would do that. And I go, no, it's not quite enough. But she says, will you do this? He owns another property with $400,000 of equity over in a neighbor. It's only like 5 miles from here. Would you cross collateralize the loan with that property? And I said, yes, I would. So can you see that there's so many ways once you understand, if you can be very flexible with this conversation all day long. I would take $100,000 down. Then I'd have, just call it a $700,000 loan secured by mom's house here, and also secured by his El Monte house that's worth $400,000. So to secure that $700,000 note, I have more than $1 million in collateral. And so he's very motivated to get that refi done, right? Because if he defaults, that's not so good. So I don't know, just an example of how I don't have to just wait for a traditional offer. I'm fine. I hope we still get it on the market and it sells for cash in 2 weeks, like my other house did 4 years ago. But anyway, there's just a quick example. Realtors can be worth their weight in gold, especially, when they're good at what they do, number one, and especially if they're open to some of these other outside the box, what most people would say outside the box solutions, because it's so powerful. So at this point, really quick, Axel, since you brought up that other guy who says, who do you close with? I use the regular title companies and escrow companies, unless they opt out and say, we don't, for whatever reason, which is so hard for me to understand, that they don't feel comfortable or understand owner financing or assignment of notes and things like that. But most of the time you just use regular people. And like for me, I'm closing stuff. I'm never just closing everything in one local area. So I don't have relationships in every city across the country. So you just reach out, and most people can work with you. Most title companies, escrow companies, attorneys, some you have to educate more than others. So you're actually doing their job for them. But it's just, owner carry is a regular sale. It's not a different kind of sale. It's just a regular sale. The only difference is who's the lender, who's bringing the terms to the table, who's the betting on the note and deed of trust or note and mortgage. So just the answer to that guy. Axel has Tony or Anthony Vatsula showed up, or Brandon Zager?
Brandon is.
they took the time. Brandon's here. They took the time to fill these out, so I want to make sure that we get to them, right?
Let me try to unmute Brandon here. All right, you there, Brandon?
Yeah, good afternoon, everyone.
Hey, Brandon. Thank you for being on the call, and tell us just a little bit about yourself and what you wrote down quite a bit here. I'd just love for you to articulate that so we can catch everyone up to speed here.
Yeah, sure, Dawn. I found you on. I switched from Android to iPhone. I just was seeing about who's on the Note Investing whole podcast scene, and you were one of the first people that popped up. So I figured check you out. And, pretty much, I'm a 9-to-5er. I'm in the middle of transitioning. I live in North New Jersey.
Okay.
And I've been a government worker since it'll be 6 years in June, like a welfare case manager for 3.5 years.
Oh man.
That was rough, like real high burnout. I did that 3.5 years. I moved over to MTA as a personal injury investigator.
Mm-hmm.
So I pretty much interrogate people about their personal injury claims in a room without windows. So it's been great experience dealing with the public, dealing with different scenarios. And I'm now moving in next week. I'm starting another position, Department of Corrections, HR. So that would be more
That
background
makes me
run.
feel like you'd be really good at doing your own collections on non-performing notes.
I'm trying to mirror Bill McCafferty. He's been really generous with his time, and I finally got to meet him at that distressed mortgage expo in Newark, the Newark Hilton. So I've just been trying to piece everything together, since reading a lot of stuff on Bigger Pockets and different forums. Mm-hmm. It's a little overwhelming when you're like wet behind the ears and trying to get it all going.
Right. So that's you're a 9-to-5-er, you have a good job, and now you've been immersing yourself in this world and all these people that you mentioned here on your form.
Right.
I mean, some of them I haven't even, I just did, it's the space has just exploded in the last week. Back in the mid to late 90s when I was kicking around the conventions and the seminars, there was really only one or two main voices for this, but then ever since the meltdown of especially 2008,
right,
the whole non-performing thing and notes in general has just gone like hyperbolic. So yeah, there's a lot to sort through when you're new. So what can we do together today?
Specifically, I hear that the tapes are been overpriced. Instead of like 30 to 60 cents in the dollar, I hear more. Like I was on a live call with Vina Jones-Cox in Ohio. She said she's been seeing more like 80, 85, 90 cents in the dollar, a lot of bidding up.
Yes.
I'm just trying to see how to work around that, how to get some decent pricing. I heard if you start to get into like pools of $1 million plus, I heard that might be maybe pool some funds with different partners or however you have to do that. That might be a way around things to get some better pricing on the table.
You're trying to go, hey, I'm kind of near the, I didn't get in early on this conversation, just like you didn't buy Bitcoin when it was $30, right?
Right. A little late to the party.
Right. So this is where we're at in the note and real estate space. A lot of the pricing is late in the game.
Right.
And the margins are a lot tighter. So that's just why, even though interest rates are going up, and you would ostensibly think, and I can't speak to how the general things work, like Ed was mentioning, how the relationship between bond markets and all the things. I honestly don't understand that as well as probably several people on this call. But isn't it interesting that if interest rates are going up, you would sort of logically think that, smart money would be chasing easier assets than non-performing notes, right? Because there's a lot of work and a lot of risk and a lot of uncertainty. But if you do it for the people who do it right, they're making bank, right? They're doing really, really well. And other people are losing their shirts because they think it sounds good, and they get in, they paid too much, they weren't prepared for the work and the connections that it takes to really make it function. And they end up selling for a loss just to get out of it. But there's still a lot of money chasing like these bigger funds that I understand. Now, this is not my space. I am strictly owner carry notes. I don't deal in institutional paper at all. I don't buy large portfolios. I may buy a small portfolio from an individual, but I don't deal in this space. So all I'm saying is hearsay from what I hear and my buddies say in the industry who are in this space. It's silly. And some of them have quit buying because the numbers don't make sense. And so the only way to really make it in the space is to connect with people who have really large dollars and are very well connected. It all comes down to relationships. The way that I got started was, by the time, I quit my nursing job and I just had a 6 years that was very roller coaster financially. I went through all my own net worth by the time I really hit my stride. So by the time I was really ready to build a portfolio of notes, I didn't have any of my own money left. But what I had was the expertise. I built some connections, and then I had people who wanted to invest with me. So the best way for someone to get involved is you have to build relationships, and you have to get some education, and then you need to cultivate other people's money, and you make a spread. So even if let's say you can go, okay, I have this deal where we can make 10% on this hard money loan. And then you bring in a friend and you teach them, or they trust you and they say, look, I'll give you 8% on this deal. And you've created a 2% spread on top of someone else's money, right? So developing capital partners from the ground up, not ones you meet at the clubs because why do they need you for? You need to take someone who doesn't know how to make more than 0 or 1% and then get them comfortable and give them 5, 6, 7, 8% while you're lending it out at 8, 9, 10, 12%, whatever it is like that. So to me, that's the quickest way for get involved with someone who's already brokered and is a broker, whether they're brokering discounted notes or hard money loans. Get the product from someone else who's already in the business of creating deals,
right?
And then cultivate your own back pocket money investors who you've created the connections, you've educated yourself, and you can talk intelligently enough that, or you put a little bit of your own money in there. That's great. Where they go, okay, he doesn't have a lot, but on this $100,000 deal, he put in 5 at least. So you know what I'm saying? So.
Yeah.
Leverage arbitrage is the most powerful thing you can do in this business. So does that help at all? I don't know if that was exactly what you're asking, or if you could even hear me.
Yes, you still hear me, Dawn? It's Brandon.
I can hear you. Can you hear me?
Yeah, it's fine.
Okay.
I recently had an interesting opportunity last week. A friend, I thought he was more the artist type. You never know till you just start talking to people. I thought he was giving me some feedback on some initial business cards for that distressed mortgage expo. I just threw something together in Zazzle real quick. And it turns out he started like Primerica, and that's more based, as people know, in the stock market. But that could he might have me there just to pitch alternative investments. So I may try to market and see about raising capital partners that way who are expecting lower yields. And then I just have to make sure of my spread beyond that.
Yeah, exactly. So your investors, if it was your money, just think, you got to act like it's your money. Like,
right.
Protecting my investors' money is more important than my spread or my profit, because if your investors lose money, they don't come back very often.
It's their reputation on the line,
right? Right?
It's
So,
your bloodline.
Yeah, and something that I need to get better at too is just make sure that everyone who invests with me, they get an education over time as different things come up in the portfolio. But one thing that I plan to do is just have a little mini course that they have to sign off on of, here's what this is, here's the potential risks. If this happens, this is normally what happens. If this happens, it's more, so. That's just something that I plan to put together just to tighten it up. Usually I have phone conversations, but we need to educate each other about risk and reward. And I'm usually really upfront with, here's what you're getting out of it, and here's what I'm getting out of it.
Sure.
So.
That sounds like a great. It sounds very highly advisable. Like if you go through credit counseling, they make you take education before they make their recommendations. So it sounds like a good way to tighten things up.
Right. But you getting out and meeting people and being in the space, that's what you got to do. People think that they can get involved in actively in this space without meeting people face to face. It's really unrealistic. Relationships is where it's at. If you want to be a deal maker, a rainmaker, the reason that you're going to deserve more profit or profit on top of someone else's money is because you're spending the time and the money to get out and get your education and make the connections. That's the gold right there.
Right. I keep hearing the a winning mindset, and the net worth is in your network. That's what I keep hearing from Bill McCafferty and anyone who's doing anything.
That's it. That is it.
But what minimum, like audiovisual marketing brochures, how much you really think of? Like I saw with Kathy Jeffers and Al Sansoni of Paper Assets Capital, they have a foldable brochure that folds up to a thick business card, and it breaks down, just like the general approach for capital partners.
Yeah,
I think something like that would be good.
Why don't you just tell, what's the website if people are interested? What did that guy say? Where do they go to see what you're talking about?
Let me grab it because I have it. Let me get it out of my briefcase.
You have a website somewhere?
Yeah, it's a great. I don't know if it's exactly on the website because I met them in person, but you can check out their general marketing situation. Let me get the website.
Yeah, get the
it
website.
Looks like Paper Assets. Yeah, Paper Assets, plural, paperassetsfund.com. I could always provide it to you if you wanted to distribute it. I could email you pictures of the brochure, different sides of the brochure.
Yeah.
Or you could just check out the website. Let me know how you like to do it.
Yeah, paperassetsfund.com.
Yeah, that's what it says is the main website, paperassetsfund.com.
Okay, fantastic. Thank you
Generating
for
passive.
Yeah, see, so here's where, Brandon, you say you're all new to the business, but you're pounding the pavement and you've met people in person, and now you're bringing back, hey, of all the people I met, I really connected with these people. That's good. That's bringing value to our call, and I really appreciate you.
Yeah, I'm trying.
Out there, that's what it takes. That's the quality. That's the qualities that it takes, and you're on the lamp for it, right? And so, if it doesn't end up being your final resting place, it's part of the journey that you have to go through to end. Get to where your particular niche is, and that's always evolving. I'm never the same. My business is never the same from year to year. It isn't. So thank you so much for filling out this form, for being on the call, and sharing some value while you were here. And I wish
you've got it.
Great.
And just wanted to add, there was a mixer I was sure to go to the Friday before that Saturday and Sunday conference.
Mm-hmm.
So I found hanging out more casually, late night dinners, all that whining and dining. That's where you really get to know people. You want to focus on there, not just the vendor booths and the formal buttoned up stuff. You want to get rubbing elbows a little bit more.
Yeah, it helps if you're slightly alcoholic. It really does. It takes a strong liver, but you can do it.
Yeah, thanks for all your feedback. Let me know if you want me to send those particular templates. I could always email them pictures of the brochure.
Feel free to email it over to Axel at notequeen.com, AXEL.
Yeah.
And kind of just anything that people think should be blasted out to the group. We'll put links or whatever we can when we host this.
Some show notes. All right,
so
great.
kind of thing. So yeah, the juice and the value in this call is mostly you guys, not me. I'm just here hosting it because I love it so much. So so thank you so much, Brandon, for being with us. That brought up a lot of valuable dialogue for us. So thank you very much. I appreciate it. And I wish you the best. And as you make breakthroughs, come back and tell us about it. All right?
Yeah, definitely. I'll keep at it. Appreciate all the time on the call. It was very informative and educational, and all the best, in your current and future endeavors.
All right. Thank you so much, Brandon. Now, we've got 5 minutes, and Axel sent me a text that there's a final question from Clara out of San Diego. So what do we have?
This is coming from Clara, and let me unmute her. Clara, are you there?
Yes, I am. Can you hear me?
Yes.
I can. Hi, Clara.
Hi, Dawn.
So it's a pleasure to have you on the call. What can we do together today?
So Dawn, I'm a real estate broker in San Diego. My client, he had a property in El Cajon. The thing is horribly run down. A commercial broker that I work with actually handled the transaction because it was zoned commercial.
Mm-hmm.
And so my client and his father, trust sale, they carried a note of $330,000. with
What was the sale price?
$375.
So they only put like 10% down?
Correct.
Okay.
So
Was that the actual market value? Was it above or below as is market value?
it was actually the market value with the condition of the property.
So 375. So he put down basically, what was that? 50 grand?
50.
Is that right? 40?
50.
50. Okay. So it's a little better. It's maybe 12% down, something like that, just off the top of my head.
Correct. So the buyer has been, so the note was that he would rehab the property and in 2 years refi it and pay off the note.
Uh-huh.
So now, and he has been doing what he said. He has been rehabbing the property. He's been paying the note, but now my client wants him to pay his half of the note.
Your client, whose half?
It was a father son.
So there were two beneficiaries?
Correct.
So one Benny wants out and one doesn't?
Correct.
Does he understand? What are the terms on the note? So it was a 330 note. What were the terms?
Now I'm ignorant, Dawn, and I apologize for that. I don't know the terms.
Okay, let's make something up. What would you guess? We're just making up a story. Let's just make up a story anyway.
Okay. Well, before we make up the story, he has contacted the buyer, and the buyer is willing to pay him half of the note.
At full face value?
No, he's wanting a discount.
Okay, how much?
There is my question to you. What is a normal discount? Is that just something that's between them?
There's no such thing as a normal discount, but in general, the person who will pay the most for the note is the payer themselves, because they already have a vested interest. They know themselves, they're the payer on the note, so they know if they default, it's only on them, so that just a general thing. I'm glad you brought this up, because when people say, how much is my note worth? Many times when people say, how much will we pay for this note? I'll go, here's what I can pay, but have you asked the borrower if they can come up with the money? Because they can usually match, if not exceed, what I can give you, because I'm a neutral third party. I have more risk because I don't know these people, or I'm not even local, to that area. So in general, anyone who wants to sell a note should go back to the payer and say, look, I've got an offer for this, let's just say it's whatever, 330, and let's just say it was interest only and still the balance is 165. Well, someone like me might come along and pay 130, but, depending on the terms, right? But the payer might be really happy just to get a $20,000 discount, and they might pay 145. So in general, the payer on the note, if they can come up with the capital, is the best one. But without knowing the terms,
yes, I
can't tell you what the average would be. I know in California, if it's a good property in a good area, it's not like too super rural or anything. It's in a subdivision in townish, or what?
It's commercial property in town.
In town. Okay. So I would say, if you reverse engineer, probably people are buying, if they feel like the collateral is solid,
yes,
and people, no buyers are buying down, to 8, 9, 10% yields, sometimes lower. Like a single family, they might accept a 6 or 7%, which is results in a really low discount. But commercial usually a little higher. But I would guess that someone would come and pay 10% for that guy's half. So I don't know how much of a discount it is until I know the terms of the note. But what I'm saying is probably not a huge discount. So if he can get 80 cents, 80%, just off the top of my head without knowing anything, I would say that he's getting a good deal.
Okay. Okay.
Yeah. So, but if you want more specifics of actually the numbers, what I would consider, then just have to hook up with me on a sort of consultant basis, I guess, you or your client, and then I can give you or if you get an offer, I can tell you, go run screaming to the closing table, or go, you might want to check with this buyer, that buyer, that buyer that I'm aware of in the area. And he should get a good price for it. He really should.
Dawn, what is your fee for consulting?
It's $250 an hour or $1,500 for like a flat rate retainer, A to Z transaction closing sort of a thing. So, yeah. So sometimes people just need a quick few minutes with me, and they pretty much, that's all they need. So a lot of people just pick the consulting, the hour, but.
Well, you know, trust me, he's been wanting to do this for a few months, and I have given him your information because, you know, I sell real estate. I'm not familiar with notes, although I follow you. I want to learn about this, but I certainly do not have the expertise that you have. So I kept advising him to get a hold of you. So now that I've been on this group chat this morning, I definitely will try to press in more to have him contact you. And now I have Alex's email address, so it'll be easier.
Axel. A-X-E-L. Yeah, so
like the axle on the wheel. She keeps everything moving.
That's
or he does.
Exactly. You hit the nail on the head. So thank you for that. Yeah, this is you're the type of realtor with an open mind that can help get things done. And that's the type of people, you know, everyone listening, this is the type of realtor you need to hook up with. People that, you know, are open to these other conversations, and you need to build your team of people wherever you are. So thank you so much, Clara.
Thank you, Dawn. And
and just to remind people, because I always forget to say things like this, but if you haven't already created a Note Queen account, you can create a Note Queen account at notequeen.com, and then you get to the dashboard where there's a lot of resources that are free for you to access, and then also links to how do you connect with me above and beyond that. So that's sort of a thing that anyone who's interested, just go create a Note Queen account, and that way you can look at my links to resources. You can have access to the other free content, plus have easy way to connect with me on a paid basis if you should so choose. And if you haven't like this kind of conversation, please consider hooking up with us in our Citizen of the Realm. Join us there. We're doing a lot of evolution this year, and I'm excited about that, what's coming. So thank you so much. You know, just use your powers for good and go out there and create financial solutions, just one mom and pop to another. It's been my pleasure to be your host, Don Rickabaugh, signing out and finishing up my coffee. Take care, everyone.
You've been listening to Virtual Coffee with Don Rickabaugh. For more, please visit notequeen.com.